Stock futures are sliding as military strikes and looming inflation data shake investor confidence. This volatility puts billions in portfolios at risk as the global economy braces for further escalation. Here is exactly how these geopolitical tensions and the upcoming economic report will impact your money. Markets are on edge as geopolitical tensions flare. The US has launched self-defense strikes against Iran, sending shockwaves through global trade. This military escalation comes at a critical time for investors who are already bracing for the latest consumer price index report. The CPI data is the primary metric used to gauge inflation and influence interest rate decisions. With tech stocks sliding and a fragile truce now teetering, traders are shifting toward a risk-off sentiment to avoid volatility. The intersection of military conflict and economic data has created a high-pressure environment for the opening bell. U.S. stock futures are sliding this morning as investors react to a volatile mix of geopolitical tension and economic uncertainty. Dow, S&P 500, and Nasdaq futures have all dipped following the announcement of U.S. self-defense strikes against Iran. This sudden escalation has put the current truce in jeopardy, triggering a sharp slide in tech stocks. Beyond the conflict, markets are on edge awaiting the release of the latest consumer price index report. The CPI data is critical for investors attempting to gauge inflation trends and predict the next move from the Federal Reserve. With tech leading the decline, traders are bracing for continued volatility as they weigh the immediate impact of military action against long-term macroeconomic indicators. The market is reacting to a double hit of geopolitical instability and economic uncertainty. Investors are hedging their bets as the threat of escalation clashes with upcoming inflation data. If the CPI report comes in higher than expected, we could see a deeper slide in tech and growth stocks. While tech is currently taking the hit, energy and defense sectors often become the focal point during these periods of tension. Your primary watch list for the next 48 hours, the official inflation numbers, and any diplomatic signals. This is a high volatility window. Watch the futures markets closely leading up to the opening bell. Markets are sliding as geopolitical tension rises and inflation data looms. Do you think this volatility is a temporary dip or the start of a larger trend? Let us know in the comments. Subscribe to stay ahead of the next move.